What's up, YouTube family? Welcome back to another episode of Market Grinders with Lydell and Amp. Thank you guys for tuning in this week, guys. We got some good stuff for you guys today. Hopefully we can give you this information for you guys that'll help you guys along the way with these trying times in the market. Just some ideas of what we feel that you guys should be doing as new investors, long-term investors. This is something that you guys can do that's help you guys along this way until the market turn around. But don't forget to like, subscribe, and hit that and give us a comment, guys. Just give us some ideas about our channel. Let us know how we can grow and get better, guys. So once again, thank you guys for tuning in today. So we're gonna start off by going over some items that we believe that you guys should be doing during this time period right here. So it's a couple things we're gonna run through that's gonna help you guys build your portfolio along this journey that we're doing together. So what you want to start off with, Amp? So what would be a good idea for people to do right now?
Well, first thing, before I even start on that, just want to thank you guys for rocking with us. We just hit 100 subscribers, so appreciate that. Let's keep it pushing, keep sharing the videos, keep liking. Keep telling your friends about it, and we're gonna keep trying to give you guys as much value as we possibly can for free. So first thing when I think about the market and what we're going through now, and to me, the market is the market, right? We have fluctuation. It doesn't stop, right? Sometimes the market goes up, sometimes the markets go down. In order to be a good investor, one thing that you want to do is you want to be diversified. You don't want to have all your eggs in one basket. And what I mean by that in the market is you want to be in multiple sectors, because the market is just like the economy, right? There's times in your life that even in your own household, there's times in your household that you're living check to check, and you're like, man, where's all my money? Where's all my money going? It's going to somebody. It's not disappearing. If you have a job and you have money coming into your household, your money is going to somebody if it's not in your bank account and not in your investing account. So you need to know where that money is going. So the same thing with the overall market, right? If the market is red somewhere, like right now, a lot of people are saying that their portfolio is down. That money didn't come out of the market. The money is somewhere. The money may be or out of the economy. It may have pulled out of the market a little bit, but a lot of it just went into different sectors. Some of it went into other businesses. Some of it, went into bonds. But the money's still there. The money doesn't. The money just keeps circulating. It doesn't disappear. So diversification, what that does, it puts you in a position that you're sitting there waiting on the money to come. So if you have some tech, you have a little healthcare, you have a little consumer staples, no matter what companies that you're investing in, those are things that people need, and money is going to flow into those things. So if healthcare is up or down, then your tech may be up or down, to offset what you got going on with healthcare. And the same thing with some of the other places. So don't just invest in one thing. Kind of spread your money out, and I think that's one way to keep your gains up, and even in a down market. So that's the way I think about diversification.
Yeah, I think so. Same about diversification, guys. So that's breaking down diversification in a nutshell, guys. All right. So the next thing that we believe is setting up your stop losses on your brokerage account. All right. So anytime you guys have stocks, that growth stocks that you guys investing in, and you believe they're going to do well, all right, and they may did well for you guys, but before the spread period came, and you guys made some good money on it, and you kind of you unsure about what's going on with the company, whether you want that to be one of your long-term investments or not. So at that point, you done made some money there. You don't know if you want to keep it long-term. Then set a stop loss on it, guys. Because you set a stop loss on it, then you got a better opportunity of not losing your profit, because that's what we're here for. We're here to make this money long-term, build wealth, and you lose it because you holding something for too long. You definitely want to make sure that you get those profits, and then you can move it into something else. You ain't lose nothing. You took your profit, you made profits, and then if that stock went below the shares the percentages that you wanted to be at, then it sold off. You could have kept some of it if you believe in the stock. Hey, you want to keep, you got 150 shares and you sell 75, just to say, hey, I believe in the company, but I don't want to lose all my profits. So you sold 75, you kept 75, and then at the end of the day, you made some profit, and then at the same time, you still in it at the same time. So you ain't lose everything, but if it continues to go down, you may feel like, dang, I think I did a good job of keeping some of it and letting some of it go down. Cause then at the same time, you're waiting for it to grow long term. So if you really did your research and you believe in that company go long term, but it could be 2022 or it could be 2023. So you got your profit out of it, and at the same time, you're still in it at the same time. So you want to set your stop loss on it. We do have a video in which we show you guys how to do the stop loss, the 5, 10%, 20%, whatever you feel that you profit you don't want to lose. You just set that stop loss in any one of your brokerage accounts, and then you get that money and you just have it in your buying power to or move it to something else that you feel that you're more comfortable that's going to grow into. So that's another option, another thing that you guys can do during this time right here. So next we're going to do pivoting. So I'm going to break down pivoting in the market. So go ahead.
So market pivots, it goes in line with stop loss. It goes in line with being diversified. So think about this: when you set up your portfolio, you don't want to over leverage yourself. What I mean by over leverage yourself or spread yourself thin. You don't want 100 different stocks in your portfolio. It's too hard to manage, and you're gonna have just a small amount of money in each one of those companies. So when they start to run up, you're only making $100 or $200 here. So condense your portfolio down to 10 to 15 stocks that you can manage, that you can understand. And when we talk about pivot, what that means is you're not selling 100% out of a particular stock that may be in a particular sector that's starting to drop. So say for instance, if I bought stock XYZ and it runs up to 150%, right? I want to pivot out of that. I want to start taking some profit from that and maybe placing it into a stock that has dropped down a little bit, that I look to start to increase in value, so I make more of my money. And you got to think, what goes up must come down. So once you start getting into the 150 or 80 or 90% returns, you want to start taking those profits. And one thing that I've learned is, of course you can put your money in one place and it go to 10,000% return. That happens over time. It does. But one thing I learned, and one thing I always say is, you never go broke taking a profit. If you're taking that 100% profit and moving it into other places to allow that money to grow, maybe you did miss out on a 10,000% run, but the odds of that happening is slim. So in the markets, you want to play probabilities. You don't want to step up the bat and think you're going to hit a home run each time, right? You want to win a championship. Just hitting that home run is fine, but at the end of the day, you hit a home run in one game in June, but you didn't go to the World Series. And that's what happens in the market. We're looking to try to hit these home runs, but we end up having a losing record and losing all of our money. We even give the home run back. So when we say pivot, that's what we're talking about. So be willing to take profits from your top gainers and put them into some of the stocks that are growing, or your long-term stocks that you plan on holding for 10 to 15 years. That way you can ride that storm out. And most of those stocks are great value stocks where they don't have 20 and 40% dips if it's a good long-term stock. So the next thing we want to talk about is panic selling, and Lydell will break down panic selling for you.
Hi guys, so this is another thing that I know my family have called about, and a lot of friends and stuff called about, is basically getting out of the market, in the sense, because they're trying to catch the sense that the market, they don't know where the market gonna go. All they see is red, and they done lost so much amount of money. So as the previous video, guys, the market is going to come back. It's only a matter of time when it do. So you definitely want to make sure that you guys are not selling all of your stocks, because at the end of the day, just look at history. If you go through trends of different stocks over the history, it always go down, and then it always come back either better than what it was before. So you always want to make sure you guys are not selling all of your stocks out, or panic selling, they may say. So you definitely want to make sure that you guys are researching those stocks, because it's just a matter of time. If you research a company and the company has growth over a long period of time, and everything is red at that moment, you probably want to think it has something to do with the market itself, not that individual company. So you definitely want to make sure you guys are just not selling out all of your stocks, because you, at the end of the day, you in this to make money. So if you sell, then you lost money. So at the end of the day, we don't want to lose money, and only thing we want to lose, if anything, is on paper. So at the end of the day, you definitely don't want to lose no money. So once you sell, you done lost money. So if you,
selling at a loss.
Selling at a loss. So if you stay in it, at the end of the day, you got an opportunity for it to grow back. So even if it go down to $1, it can go down to $1. At the end of the day, a year from now, it can go right back to where it was, or it can go to 15 extra dollars. So at the end of the day, you ain't lose anything. Now you do lose when you sell, and you always got to remember, guys, when you sell a stock, somebody's on the other end buying it. So that person believes that that stock is at that right price for them, and it's gonna grow. So if you sold it and then somebody else buying it, somebody's on the other end buying it. So once they buy it, yeah, you saying yeah, they saying yeah, but they saying yeah because they believe in that stock and they believe it's gonna go back to where it was at. So I always take that into consideration, guys, before you guys sell a stock. So please make sure you guys remember that. And last thing, guys, please make sure this is a great opportunity to add money to your buying power. So that money that you get from your profits or the stock loss, if that kick in, it goes right back to your buying power. So if, during the red times, what we feel is a good time to keep buying value stocks or buying dividend stocks, or just building up your portfolio, we think this is a great time for that. You can also continue to add money to your buying power and waiting for the bullish run to come back. So if that money's in your buying power, you don't got to transfer anything. You just say, hey, my money's there. So you see the green come around, or you do your research and then you see that the market is turning around, you already got that money there to buy more AMC or to buy some EVs if necessary, like NEO or whatever that we believe is going to continue to grow up. So you definitely going to make sure you guys are ready for that time. So please make sure you guys keep adding to your buying power so you're always ready. Because one thing about it, the market up and down in the blink of an eye. You know, money 9:30 get here on Monday morning, and stocks turn green, or you did your research over the weekend and you see that something's dividend plays or whatever case went through. You definitely want to be ready for it, but please make sure you guys keep that buying power as high as you can possibly keep it at, just so you guys are ready to buy the pounce on anything that's coming up that you guys want to make sure you guys can get in on. All right. So thank you guys for tuning in. Anything else you got that could help out our new viewers about with doing these red times right here?
The biggest thing is, sometimes it's fine not to do anything. It's fine not to put your money in the market at a certain time. It's fine not to be trading. It's fine to sit back and analyze the market. So but during those times, you need to be studying. You need to be understanding other strategic ways to make money in the market. It just makes you a better investor, because the market, I mean, a lot of times, it's not a identified bullish market, and it's not a truly identified bearish market. Like now, it goes from bullish to bearish in a week, and we're dealing with that. But a lot of people are making a lot of money during these times because they understand, how to play that volatility. So, if you understand, volatility can be your best friend in the market. But it's all about doing the research. It's all about studying. That's why we ask you guys to keep rocking with us, keep hanging out with us, and we're gonna try to give you as much information, much insight on the market, and as much education as we can on our channel. Just in closing, I would just say, just give us some feedback, give us some comments. Definitely like, share. If you your family members haven't subscribed, tell them to subscribe. We're trying to build a huge community here, and I think that's what helps all of us in the end. If you guys out there are into investing, and you got some insight on some of the things that we're saying, put it out there. Let the people know, so everybody eats in this market. And I think we have a great opportunity, right now in the next coming years, with the way the markets are set up, the way our government is playing things right now. It's just a great opportunity for us to get a piece of this wealth transfer that's going on right here under our noses. But we got to keep our eyes open to see it, and we got to keep our minds open to understand it. So with that, all I gotta say is, man, thank you guys for joining. Continue to follow us, like the video, subscribe if you haven't, and at the end of the day, keep grinding.
Keep grinding, guys.
Peace.
Thank you, guys.